You know, yesterday at this time, we were just beginning to race ahead on the Fed comments that we got out of Jerome Powell, talking about, I think we hit our Goldilocks moment, our sweet spot on interest rates. That was all the markets had to hear. That was kind of allaying concerns that maybe we had some closure on this interest rate thing, that interest rates are still going to go up, but not as aggressively. Then the President of the United States and trade, that would be the other shoe to drop, and hopefully softly, where we could see some progress on the trade front. That would be a nice 1-2 gift to the markets to take uncertainty out of the equation here when it comes to trade, and that maybe we can avoid all these expensive tariffs and back and forth that could escalate. You just heard from the Australian Prime Minister says, you know, this is a global thing here, and if these two leaders botch it, the whole globe will feel it. Let's go to the Independent Women's Forum Senior Policy Analyst Patrice Leon-Luca. We've also got market watcher Paul Dietrich. Paul, ended with you. What do you think now of the prospect of a deal, or even the semblance of a structure of a deal, and that the Fed's move, and where the markets clearly responded favorably to it, actually puts the pressure on doing just that? Because you don't want to unwind all that with no action in Argentina.
Well, what they're going to do, and it seems like for the last 2 weeks, the administration has been working with the Chinese to come up with some framework, and that framework is that Trump will postpone the increases in tariffs that were planned for January. In return, the Chinese will get rid of their tariffs at the moment against agricultural and energy products, but the promise is that we will increase tariffs in the late spring if there is no progress on these talks. So there is a deadline. If that happens, I think next Monday is going to be a really good day for the stock market, because if you look at it, will refocus everyone's attention on the underlying U.S. economy. I mean, we've had 20% plus earnings for the S&P this year. We're going to have 3% GDP growth. We're going to have a record, probably the largest retail spending spree in history during the Christmas season. All of these things are good, and the stock market is flat year to date. And so I believe that we're going to see a real movement, because people are going to look at the underlying economy, which is running on all cylinders. And mark my words, I think this is going to be a December to be remembered.
All right. Well, the Federal Reserve might quibble with whether it's firing on all cylinders, maybe not as many cylinders. But Patrice, is it your sense that if none of that happens, that the reverse holds, that the markets tank on Monday if there's not even the semblance of a deal or talk of talks again?
I don't think the markets would tank. Perhaps they wouldn't shoot up, or be stronger than we've certainly seen this week. I think generally, as my colleague here alluded to, we are seeing a strong economy, but also the indications from Black Friday, from Cyber Monday, have been that Americans are willing to shop, and consumer spending has been driving economic growth. And I think going into Q4, or in Q4, we're going to see that consumer confidence continue to boost the economy. That's going to be great for the stock market.
You know what I worry about, guys, and maybe it disproportionate. I certainly know the activity and seeing it in the shopping figures. And at first it was my wife sort of holding it for the entire country. Now I'm happy to see that there are plenty of others joining her. But particularly what's been happening on the housing front, Paul. I mean, data again and again, pending home sales falling to a 4-year low in October, completing a Kate Schiller, existing home sales, new home sales, that all have slowed down mightily. Does that worry you?
Well, no, this has happened before, especially if you look back at previous periods of time when the Fed was raising rates. There was a short-term period where the rates did seem to stop home building because people had an expectation of if they could spend this amount of money, they were going to get this type of house. What happened is that people start lowering their expectations, and if you want a new house, you're going to have to settle for something a little bit less than what you expected. We've seen this happen many times before. It will happen again, and you're going to see housing pick up, but people are going to be buying houses that are, a little bit less than what they desired, and that's something that's been different for the last, 10, 15 years.
When you look at things, Patrice, bullish?
Well, I mean, maybe. I'm certainly not bearish.
All right.
You know, I do think, though, that the housing market, of course, has been a little softer this year than we've seen in the past. You know, but to the point, you know, that, you know, consumers are, if the Fed continues to be very aggressive in raising interest rates, that is going to weigh down heavily. And it's interesting that President Trump is trying to push, you know, the rising interest rates on, you know, onto Jerome Powell and the potential for the economy to start to decrease because of that. And so, you know, it's not that surprising. I do hope, though, that this weekend at the G20 we do see some resolution with China, and that we do see that, you know, world leaders coming out of this recognize that, yeah, the economy is strong here in the United States, and that, you know, the United States in particular, though, is not going to continue to give away the farm when it comes to how we deal with China and allow their predatory practices to continue in the name of just trying to have some sort of fair trade, because that really isn't fair.
Yeah, any deal is not necessarily better than no deal. Guys, I want to thank you both very, very much. Then there's the big